Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. This is our pre-market session where we take a look at the market, the structure, where we are within the trends, drill down to our trade levels, what our targets are for the day, and what our main hypotheses are. This is a subscription room. My name is Doug McKay. I'm the founder. If you're interested in finding out more about joining us, I'll put the contact information up in just a second. But before that, please read the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results in any trades that you see. In Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, if you do want to get a hold of me, here's my contact information. This is not a commercial venture. This is just a private chat room and trade room. We do live trading during the course of the day and live analysis. Send me an email at quantumleapfutures@gmail.com. There's no website. Or just give me a call myself, 647-545-8065. Love to talk about the markets. Of course, you're going to need Skype if you want to come into the room, so it is free to open a Skype account. It takes about 30 seconds. Send me a contact request at Doug_McKay. And then on YouTube, if you want more of these videos to see our past history, there's about 300 days up on YouTube of these pre-market sessions. You can get an idea what we do every day, same routine, and what our results have been to date. And then, of course, if you like what we do, follow me on Twitter at Crazy2. Okay, so let's get the news out of the way right away. So far this morning we had RBC manufacturing PMI. I'm sorry, it's not out. We've had GDP, which came out and missed. At 9:30 we have RBC manufacturing PMI. And then 9:45, we've got final manufacturing for U.S., and then 10 o'clock will be the big news, which would be the ISM manufacturing and PMI for the U.S. construction spending and prices. We do have vehicle sales out all day today, and then FOMC, Evans is going to be speaking at 12:45. So basically, we've got a fair amount of news. It is December 1st. Welcome December, the last month of the year. And so we've got some news, plus with the fact that it is positioning day for a lot of the mutual funds coming into the month. So let's take a look at what we were looking at yesterday. Yesterday, we were looking for a rotational day with an upside bias. I was actually thinking that we were going to come up here and hit this 2095 with the way they traded overnight. But we did say that if we got below the 85, then we'd be looking for a move down through to test the low, and if we didn't hold, then the big target and our main target below was where that composite VPOC was at 78.50 when you went down to that 78.50 and hit it to the tick. Now the interesting thing is we've got the VPOC, the composite VPOC shifted up to 86.75, and it shifted even before we came down here. This was a late day. The key to yesterday is we never got to critical mass. Critical mass for us yesterday was at 2011. So the sellers never relented. They kept on pushing. They were trying to push it down towards that 2073. They just didn't have enough inventory and enough conviction to push it down. So although we didn't end November, with the average mean of 2.3%, we did end November as a positive month. So the bulls are still winning this year. Now, this year, this month, we have 4 weeks left of the year, and our year open is 2055. So we still have plenty of room to end this year on a negative note. Will it happen? I don't know. But we can't think that they're running away with this, because even this week's ATR, the average true range on the weekly right now is 73.21, and that still gives us an opportunity to go down and test that 2020 area to the bottom. It was a grindy day yesterday. I think what we ended up with, I didn't trade it extremely well. And I didn't do a lot of trades. Why is my trade sheet not? So there were our trades yesterday that we took. We ended up with 13 and a quarter points. Is that not formatted? I think I ended up with 0.83 expectancy on the day per contract. Yeah, 0.88 expectancy. My sweet spot is about 1 point per contract. But it is what it is. Some days is just a grind, and yesterday was certainly a grind. And I missed a couple days, a couple trades because I was distracted. So let's start today with the same thing I like to do every day. Is I start with a monthly candlestick chart with a 9 EMA and a 20 SMA. I'm simply looking at where we are within the trends on the different time frames. I'm looking where we have violated the trend, where we're consolidating, how good is the trend. I'm looking for slope and separation for the trend. You can see this, this trend over the past, 7 years has just been, very strong. It's been challenged in 2011, but it really hasn't really been challenged until now. And we came down in September and in August and September, and looked like they were going to roll it over. And then October took it back, and so far November is held. Does December hold as well? We don't know. We do have slope, but we don't have separation, and we don't even violate this trend until we get back below the 2024 area. Going to the weekly, we had the start of the downward trend. They took it back in October, and so far, we've got slope and separation to the upside. So this trend is looking to be possibility of a continuation. To the daily, we are starting to see some weakness. We're getting some consolidation up here. We're holding the 9 right now, but we've lost slope, and we're starting to look like it's starting to roll over. But until we break below that 9 on the daily, which is going to bring us down below that 83, 82 level, we still have to be thinking that the possibility is continuation to the upside. Going to the intraday, you can see on the 4-hour, more consolidation. It really has been a lot of consolidation coming into these smaller time frames as we just battle this out. There's no clear indication where we're going as we move down through these time frames. We are starting to see on the 30-minute the possibility of a downward trend setting up coming into the RTH session. We're back below the 9 and the 20. We've got slope and separation. We took out that naked cross overnight up at the 2090 level, and now looks like they're starting to accelerate it. And if you go down to the 15-minute, you can see same thing. Although we had a stronger trend, they tried to take it back. Now they've come back down, and we're below the 9 and the 20. And then the 5-minute, you can see that this trend is starting to continue. We are seeing some buying tails here. There is a naked cross that we left up here at 87.75, 88 area, so that could be taken out. You can see here we just took out this naked cross. If you aren't following the naked crosses yet, put up a 9 EMA, a 20 SMA on all your charts, and watch. Every time you get a naked cross, those naked crosses will be challenged at some point in time. We used them as targets, and you can see that here's a perfect example. After we made the low, of the night down at 82.50, they rallied it and left this naked cross, and when we do, we come down and take it out in the last 10 minutes. Okay, so going to the big picture, the structure. The big news, of course, is the fact that we had the composite. My composite is, it goes back to 2013, January 1st, 2013, and we've been playing ping pong with it between 84 and a quarter and 78.50. Yesterday morning it was at 78.50, and it shifted up into 86.75 yesterday. So value has been accepted higher. Whether or not we hold this level, if we can hold this value, I'd be looking for them to push up, test those 90s, 92s, and the overnight high at 92.75. If we get above that, that breaks us out of the 6-day microcomposite value area, and I'd be looking for a run to test that 97, where we tried to hold value after the breakout, and the new fractal high at 21.10.25. The key line in the sand, the key line in the sand for us is still this 97.50. This is the longer term microcomposite that runs from February through to August, and the value area high is 97.50. We're currently still in value, and if we break out, then I'd be looking for a move up into test the shorter time frame microcomposite, which runs from the October the 16th through to yesterday, up at 2103, and above 2103, I think we make new highs and break that fractal or that RTH all-time high up here at 2117. But right now we're stuck in the thick of it right now in around this 86.75. I don't think we're going to get away from there real quick. I think today is going to be a positioning day. I think we're going to see a lot of rotations, and this area still has undetermined fair value between 78.50 and 86.25 and 84, and the current microcomposite VPOC here at 80.50. I think we could chop around here today and probably test both sides of this up into the 92 down to the 74, possibly even to the 97. Below 74, then we really have to be thinking that they're going to test the euro, the prior month open at 73 and try to take us down into the 66 to 57 area. And remember, our year open is down at 55. But I think it's going to be rotational in here because of the fact that we just got the composite VPOC shift, and I don't think we're going to get away from this price point too quickly. So let's take a look at what's happened overnight. Overnight, we've got a overnight high of 92.75, which is basically just 3 ticks above yesterday's RTH high, and then our overnight low is down at the 82.50. And that was basically, just, near this 81.50 level. Our current overnight VPOC is 87.50, basically right by that 86.75 composite VPOC, and the 6-day microcomposite VPOC all sitting around right where we're trading right now. There's no real definitive LVNs. There's one here at 90. That's basically right near our open from yesterday, but I'm going to use the 89.25 as a trade area this morning, because above that the profile is pretty thin, and I think we get a move up to test the 91.50, 92 and our overnight high at 92.75. Really nothing more to guide us with the overnight, so we can get rid of that, and we'll just expand this out. So right now we're trading inside of this balance. There's a couple key levels. There's the 80.50 area, the overnight low of 82.50. The 80.50 is right near our VPOC yesterday. We do have this value area high here at 85.75. So I'm going to be using 85.75 as a trade level. Below that, I want to look for them to come down and test the 84.25 as my first target. That's where the composite VPOC was and likely to be tested again. And below the 84, look for continuation down to take out the overnight low and the close from yesterday at 82.50. So we closed at 82.50, and it's been our low overnight. And inventory is net long from overnight. So we got to look at where the longs will be punished. And I think that we really don't punish them until we get below this 79 and a quarter. So I'm going to be using that. It's going to be a real tough trade level. You can see how toothy this profile is. How toothy this profile is inside of the value area. So you got to be very, very careful once we get inside of value. Try not to, put a trade on inside of here unless you get a really good setup, because it's going to be choppy inside this. There's just too much going on here between the 86.75 and the 78.50. So no clear distinction of where the market will advertise price to once you're inside of value. Let's take a look at the upside first. If we get above 89 and a quarter, I'm looking for a move up to test the range high and the overnight high at 92.50. I'm going to be targeting 91.50 as my first main target, and then I really can't take the use the 92.75 as a trade level. It's just going to be too difficult because they might just come up here, find responsive sellers. So I can't take the breakout trade here. I really have to take it down here at the 89 and a quarter. But what I will use is I'll use this value area high at 93 and a quarter as my next trade level as a breakout trade to the upside. So I want to wait until we get above the 93 and a quarter. Then I can take the continuation trade or the breakout trade into this 94.75 and 95 and a quarter. I still think that this is going to be challenged. This was the holiday session VPOC and close. And then, of course, above that is our key line in the sand, and then all our numbers basically are all the same. We've got the 97.50 as a key line, 2100 as the first target, but I'm really targeting 2103.50. And then our daily upside target off of the low, our daily range is 24.58 right now. So off of the 82.50, the daily upside target is 2107. And we're still up in range to test into those 2100s. It's going to be interesting the next couple days on whether or not they try to push towards that 2100 level again and get into the 2100s, or otherwise we leave it alone and then we go down and test the year open. Above there you've got the should be 11 here, 2011. And then you've got the 15.50, and of course the next big target above is that adjusted RTH high up here at 2117, all-time high. And then above there we've got 2120, 2126 and a quarter, the all-time high at the 2134. Right now, based on our weekly low at 78.50, and with our weekly ATR target of 73.21, our upside target's up here at 2139 and a quarter. I'm sorry, no it's not. It's been raised. It's up at 2151.71. That was last week. What was interesting last week is our 75. Our weekly range has been running in the 70s. Last week's range was only 32 points, 32.75, which I thought was pretty tight considering it was the last week of the year. So they've been battling here, and neither side has capitulated, going into the end of November. Is that going to be what we're going to see more of in December? Okay, to the downside, below the 85.75, we get back into value. I think we'll come down into the 84 and 82.75 area. If we don't find responsive buyers down here, look for the continuation down to 80.25. This 78.50 is going to be a very important level for us today. And we could get the VPOC, the composite VPOC shift down again to the 78 because there's not a lot of difference between the number of contracts. And if we don't hold that level, then our key line in the sand is 74.50. I'm going to be targeting the 75.50 as my first target. And then, of course, below the key line in the sand. Last month's open was 73. I forgot to look at what this month's open was. I think it's 89. Month open. This month open, nope, 85. What was it, 85.25? 85.50. So our month open is right below that value area high and our trade level. That's going to hide it. Send to the back. There we go. So right now, we have a positive month below 85.50. Then we get into a bearish month. And then below the 74.50, the main target below is going to be that 70.75. And I'm sorry, 70.50. And then below there, you really don't have much to hold us up until we get down into that 66.50. Our daily ATR downside target off of the overnight high at 92.75 is 68. I'm sorry, 68.25. And then we have the 66, and then of course this area here in the 62.75, 60.50, anything below 60.50 is going to be a really great short into the year open down here at 55. And then support comes in at 52.75, and then we have that 48.49 area. 49.75 is our key line in the sand, as the next area. And then below that, there's not really much to hold us up until this gets into that blunt area of the profile. And I would be targeting this 27 down here. And right now, our weekly ATR target is down at 2021.75. We don't need the critical mass. And really, the next big location is down in this 2020 to 2027. Don't think we're going to get there today, just looking ahead. So right now, we're going to open up outside of value, but inside a range. Two trade levels to pay attention to on the open is going to be this 89.25 and this 85.50. Above 89.25, looking for a push up into the 95 with the takeout of the overnight low, and below the 85 area, looking for a move down into the 82 and possibly down here to 88 and a test of that 78. Below 78, then I'm thinking they're going to get aggressive on the sell side and push us down into that 74, 75 level. And below there, I'm looking for a trend day setting up and a push down towards the 68, 66 level. That's what I'm thinking of. I do think it's going to be rotational today. I think, most likelihood is rotation between 90.75 and 74.50. And, above either of those, then we could get a breakout day and a trend day, but not typical on a first day of the month. Take a quick look at the Keltner. See how they line up with the levels we're looking at. Keltner center line is at 87 1/4, right over, basically at the overnight VPOC. A move to the upper Keltner line will take us up into that 93 area and take out of the overnight high and that trade area. And then below there, the lower Keltner, the center Keltner line move down will take us down into that 81 area, and our continuation into value and an 80% destination trade of the value area. Take a quick look at gold. Okay, so we've got balance right now in the 70. We're not getting away from this 70 and 68 area. They're just chopping around right now. If we hold the 64, I'd be looking for a slow grind up today, up into the 70. Above 73, 60, I'm going to start my taking shots at the long side again. And the first target to the long side is going to be the 79.80, and with the main target above up in the 86, 87 level, and then above there, I'm looking for a bigger move up into 1094 and a test of the 1100s. I'm not shorting gold right now. That's not the smart trade right now, even though I think that we could come down and test this 46 level. I mean, there's not much down below us. But right now, I don't think we're going to get away from the 68 to 70 area too quickly, not coming into the end of the year. So it's going to be tough trading gold in December. That's what I'm looking at. As always, trade well, trade safe, and we'll catch you on the flip side.